Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey, welcome everyone. Thanks for joining. We're going to get started in a couple minutes, and we're going to wrap it up right at 8 p.m., guys. So we're going to go over our swing trading charts. And if you guys go over today's top news, we had FOMC. And if you guys have any quick questions, any educational-wise questions that I can help out with to wrap up the call, I'm more than happy to do that, okay? So just give me a minute, and then we're going to get started here.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey, welcome everyone. Good evening. Thanks everyone for joining. Welcome to Stocks Network Trading. My name is Ron. My partner is Dave. And I hope everyone is having a good day today. So this is a follow-up call. This is our day 3 session of our SST swing trading. And now it's post FOMC. So if you joined us earlier, we had a good FOMC session, and now this is the aftermath. So now we can start to see some results now after post FOMC. We can see some bodies of some candles. We can see if we got some structural candles. Is it indecision? Do we have something else to maybe look at on our swing position? We will take a look at the gold chart and also a quick little analysis on the USOIL that we did yesterday. And guys, I do have to wrap it up at 8 p.m. today. I have to be good, solid on time management. I'm meeting a buddy. We're going to have some all-you-can-eat chicken wings today. It's Wednesday night, all-you-can-eat wings. And there's also the Emirates NBA Final Four, the quarterfinals. And it's Phoenix against Oklahoma. Oklahoma is a solid team this year. They're 23-1. So they're pretty good in the NBA right now. And then the later game is San Antonio Spurs with Wemby and against the Lakers. So I'm a big sports fanatic too myself. I have a passion for sports, just like I do trading. And so I want to go through the analysis and answer any questions you guys have. And then this is going to wrap up this week's swing trading Tokyo sessions. Tomorrow I would love to do it again, but I have my daughter's Christmas party at her school, and I cannot miss that for the world. So I got to be there tomorrow starting at 6:30. So we're going to wrap it up. This will be our last session. And then I'd like maybe if you guys have any questions regarding technicals or anything like that, if I can help you maybe the last 30 minutes of today's call, just to help you guys if you're unsure about anything, maybe if you're going into the weekend and things like that, and there's anything that you need any clarification on, okay? And Hope everyone is having a good day. So I'm going to get into it. I don't want to waste your guys' time. It's going to be a quick, informative session, and I promise I'll get to everyone's questions. There won't be a lot of us on the call. Normally, during when we get to Wednesday, Thursdays near the end of the week, viewership kind of dies, and traders maybe have made goals and maybe relaxing, or maybe they had a big FOMC and maybe calling it a night. But I do appreciate all of you guys here, even if it's not a lot of us. I do appreciate each individual that's here. Okay, so thank you guys. So first thing is we will look at gold. I'll come back to the chart. There's a really significant body of a candle, and I'm sure that we can find a point of control and be patient. Maybe we could look for a swing pullback coming into a point of control of FOMC volume. So this is significant. We'll have a look at gold. We'll talk about that. US oil dropped a little bit, but we're still kind of in this pennant, still building in here on the 4 hours. So oil might be an opportunity coming up this week, going into next week as well. Okay. So just going over today's news, we had a lot going through the news. We had our early U.S. unemployment cost index. We had the Bank of Canada rate statement already released. There was no change. There was a pause. The reasoning was Canadians' labor market is good, solid is what they're saying. So there's no point in decreasing interest rates right now, and they're continuing to monitor going into the new year. Crude oil inventories were released also today. U.S. has confiscated a tanker on the Venezuelan coast over there. So that's developing right now. So we'll see what happens with that. That obviously will affect the crude oil market, and we'll see how everything develops over there with that in the news. Also, the big day was you guys hopefully were on the call with us. If you weren't, it's available. You guys can watch it. It was a good session. We were very patient. We were very disciplined. There was a trade we took, and it got 100 pips on a sell on gold. And then after the call, you could see how it kind of gathered up that liquidity and kind of moved with the markets. Bullish, everything. US 30 was bullish, NASDAQ was bullish, and gold ended up being bullish. So they really took that 0.25% decrease as a positive. And we did a blog as well on the impact, and it kind of played out if you read our blog, and some tips and things like that kind of played out. So that's how, guys, you can kind of create a little narrative for yourself when you're going into these type of news announcements. What they already kind of predetermine whether there's going to be a cut, a hike, or a pause. It's kind of in the forecast. And then if you kind of follow it, you can follow it. Not always. Is it always like that? No. But from most of the part, then you can see that they came down today. They grabbed that liquidity, and it was part of the plan to continue to move higher and higher. So that's what we got to understand, is how do these things develop? And the more you watch, the more you analyze, the more you look at the charts, the more FOMCs you're part of, the more NFPs, the more you actually see in the markets, the more experience you have, the better you're going to get at doing your job. It's just like when you guys do your job every single day. I'm sure you guys are professionals at doing your job. You guys can do your job with your eyes closed. You guys have probably been doing your job for 5, 10, 15, 20, 25. Maybe some of you guys are approaching retirement, 30, 35 years at your job. I'm sure you guys know how to do your job. If someone like me came along and it was my first week, you ask yourself, do you think I can do your job? Maybe it's going to require some type of job shadowing, watching you, learning from you. You're probably know some tips. You probably know some shortcuts, how to do your job and things like that. And through experience. So the same way as trading, the more time and effort you put into it and you follow your risk management and you're disciplined, then the market will reward you for good behavior. But if you're reckless and you gamble and you over leverage and you do some silly things, then the market unfortunately could damage you, financially, emotionally, psychologically, everything. So you really have to balance everything to be a successful trader day in and day out. So, and I know a lot of you guys are really working on it. So I want to congratulate you guys and say good job to you guys. And let's continue with that momentum, finishing off this year and going into the new year. Okay. And so they came out. The actual number was the decrease, and then there was the press conference. So then Powell came out 30 minutes later, and we have his remarks over here. Like I can go over them. His remarks. Also, Trump was also talking at the same time. So there's a lot going on. But the best thing for me to advise is watch. Just it's about 30 to 45 minutes, and you can watch this conference, and you can see as soon as he came to the podium how he starts it, get familiar with what he does, what he says, and then you can kind of justify, maybe listen for some forward guidance because it could dictate how we're moving into the new year. Did he say anything about possible rate cuts going into 2026? Pause, hikes. He was talking a lot about inflation, the tariffs, labor market, and this could maybe the last time we see Powell. He could be replaced in the new year, and we might have a new FOMC chair for first time in a while. So a lot of us are familiar with Mr. Powell, but we might be getting Mr. Hassett coming in very soon, and he is a puppet, not a puppet. He's a Trump puppet, and so basically whatever Trump says, I'm sure that he can twist him in a way that benefits Trump. But as a trader, do I care who it is? No, I just got to follow what they're doing. They could put anybody on there. They could put Mickey Mouse up there on the podium. I really don't care. I just got to follow what they're doing, right? Whether it's to help them or to help the everyday American citizen. I'm a trader. I'm gonna trade regardless. Whoever they put up there, like I said, whether it's Powell, if it's Hassett, or it's Mickey Mouse, I'm gonna continue doing what I do, just like you guys should be continuing doing what you're doing. Okay, because there will be volatility, there will be volume in the markets, there will be liquidity, there will be money printing, and it's going to move somewhere. So you and we got to be doing our research, be on top of the game, and just follow the money. So I'm sure that you guys know that's what we do here, okay? So that's our news. If you're trading 7:30 p.m., there is some Australian high impact news. Again, the unemployment rate will be coming out and employment change here in Australia. We do have a lot of Australian viewership at this time because it's basically your morning and this is your market open. So if you are trading the Australian dollar, the New Zealand dollar, the Japanese yen at this time, this is when it is your time. Your banks are opening up. It's your time of the world right now. So I would really recommend, if you are trading any currency pairs, just again, these are high impact folders for you guys as well, just like when we have US Canadian high impact folders. So you guys got to be very careful with this as well. Okay. In our Discord, guys, we sent out quite a few signals today on the indices. You can see this one, buy on NASDAQ. Okay. It came up the first time. And then when it came to the retest, yes, it did move, but then it went into drawdown if you went in on the first time. But that's why we give a drawdown to allow it to breathe. Then you can see it developed. And then again, here's the big move, kind of like FOMCs. Then it came. If you didn't get in, again, we located this area, 25,000, around 628. And then there's a wick and a wick, and then it eventually ended up moving for approximately 200 plus pips. So that was on NASDAQ right over here. And also on commodities, there was a few signals sent out earlier on gold, okay, on the sell that 42.10. Remember, just right before 2:30, we spotted it, and that's the move we took. So we got the signals there, and then later after there was there's the sell 42.10 running, and then there was a oil also. We sent out on oil, guys. This is Big Dave. If you guys haven't, a lot of you guys maybe haven't met Big Dave, but this is him here. A lot of people say he resembles Hezbollah. It's not the case. Everyone has a twin in the world, and this is Hezbollah's twin. This is Big Dave over here. So this man is the other part, the other half, the better half of SST over here. So it's right over here. And guys, these were the type of signals. So you got to see when we give out levels, like this is the level 4,215. The volume was below that level. A signal comes out, and then we're watching how it's building, and then there's your first bar right there. Your first bar that closed above the signaling area. That doesn't mean just go in blind, but look at it. Shorter wick, big volume. I'm sure if you cut that in half and found the point of control. It opened bearish right into there, and look at it, retested that point of control, got the wick, started to come up, short wick right there. And you got the confirmation volume closed, you have a nice solid retest into the point of control, short wick right there. You could have engaged in the trade and placed your stop loss maybe below this wick or below that point of control. And if you see then, if you took the opportunity then it just moves straight into profit. And every single one of these big candles, if you're trailing it behind, cut it in half, find your point of control, came down again, respected it a little higher, and it kept moving up. And if you did it on this candle, unfortunately, it came down, could have liquidated you there. But if you were still holding it, still holding now points of interest, the body closed, body open. So that's the way how I kind of trade when I'm looking at things. And this thing continued to move. I always target kind of the next structural area, but it targeted it and oil broke right out of there. So that was an excellent signal on oil. So even right here, when it was sent out, you can see it closed below. So yes, it can give you a false signal too, but that's why you got to watch what you're doing. And I always say, don't just trade blind. Just because you got a signal doesn't give you the right to just go in blind. You got to see the volume did close below and it continued push down. So if you went in, unfortunately, I got to tell you, you went in incorrectly. You went in at the wrong time. You went in just because you got excited because it came to your signal. You got to learn how to be a little bit more disciplined than that. Then watch what's happening. Then it came a little deeper, came back up. I'm sure it found some supporting level from the past over here. And then it came back up and there's your closing bar again. And if you didn't buy these FOMO highs, look at how it pulled right back into the point of control with a solid blue candle closing above. So this is a completely different story. I can see a big blue candle closing above the signaling area. I see nothing over here. So that's the difference. And that's why some traders struggle with a signal group. I'm not saying, but if you're looking for signals, guys, you got to also use a little bit of, you got to see what's going on as well. We're giving you a location to consider taking a buy, but nothing is set in stone. You still got to do a little bit of work on your own. You know what I mean? And then came back, retested, and there it was gone. So after it scooped this liquidity down here, that's just what the doctor recommended, and it had enough juice to break these highs and continue to move up. Okay, so those are signals. I don't know why here, but Diddy approves the oil him up. 50 Cent just cruising by here, doing a drive-by, and we're silly in here. Okay, there's some silly memes in there. But we take our trading serious, but we do it in a funny way. Okay. And there's a free Telegram channel pinned for everyone at the top. We have 100 viewers on YouTube. Guys, there's a free Telegram pinned at the top of the channel. Join this. It gives you all of our free YouTube links when we go live. Shout outs to all of you guys doing really well. Today we had Abdul Rahman from Kenya, 2% today on our FOMC. Congratulations to him. And also, Dave does live trading as well in New York sessions, Tuesday, Wednesday, Thursday at 8 a.m. And these are his sessions with the snipers, pipping and dipping in there, educating as well. Guys, this was the blog that we gave to you guys last night prior. The reason why blogs come out maybe prior is to help you read and educate as to what's going on the next day. So we do it, strategically with these blogs to help you guys get informed of what's going on in the next day in the market. So this one was FOMC, the impact on gold, NASDAQ, and US 30, what we traded today. And if you read it, everything pretty much aligned and played out to exactly what this blog was saying. And how a rate cut can benefit these securities in a bullish way, okay? And everything we do here at SST is available for you guys, okay? And our website, if you do want to join the team is where it's at, guys. There's a lot of education. You can basically go through all of this on your own. It's a lot. I'm telling you, it's a lot. It's a lot of content. There's courses, there's boot camps, there's webinars, there's everything here to go through here. There's a lot, guys, okay? So you can basically, it's like going back to school. It's like a college. It's like university. You can go in and go through this, and if you want to educate yourself, you'll learn everything that we do in the live calls. Okay, but you can go at your own pace and learn. And then if you do have any questions, then you join us on our. I'm going to get back to Wednesday webinars coming up very soon, and then those are those classes on the Wednesday webinars. We come in and I just listen to you guys. You guys, it's open mic. You guys Q&A. You guys tell me what you need help with, and I'm helping you one by one. Whoever needs help, and I go at your pace. Okay, I'm like your teacher basically. So you guys tell me what you need help with, and it's my job to help educate on that. Okay. I'm pretty good at what I do. Like I can go ahead and figure out what you guys are struggling with, but I like to hear it from you guys, you know. Finally, the blog section is right over here. So here was all the blogs, okay? So thanks guys for joining. I'm going to get into the charts now because we have basically an hour and 10 minutes to go. So we got a lot to work on today. Thanks everyone for joining on Zoom. I appreciate all of you guys. Sergio, thank you for joining. Justin, thank you guys. You guys are amazing. Every single day learning and earning. Good job, guys. Agent Smith, my man Bradley, thank you for joining, brother. It's been a long time. Bradley, when do I use market order over limit buys? The thinking criteria. If my thinking criteria is like this, Bradley, if I'm at the computer and I'm scalping, I'm using market executions. I don't need to use pending orders. If I'm there and I'm staring at the charts, I'll execute myself. If right now, like I'm gonna probably use pending orders if I'm swing trading at a point of control, and then I'll have a pending order sitting in there to get activated. Okay, so I use more pending orders when I'm swing trading. While I'm doing my intraday trading or scalping, I'm doing more market executions. I'm hitting the buy, I'm hitting the sell button. Hopefully that clears that question. But that's my criteria, my thinking, the way how I do those things. Okay, I just got a message I'm going to read from Bradley. I haven't even read it, but the starting is, hopefully this encourages everyone. So I don't even know what it's going to say. Hopefully he's not setting me up to say something stupid, but I'm just going to read this word for word what Bradley in our group is saying. After thousands of failures and 4 near quits, today I officially hit the highest balance across all 4 funded accounts. It's working. It took 5 years to get there. Today never would have happened if I gave up. You can do it. I give glory to Jesus. He's my God and I love him. And Jesus told me to start trading, so it's his fault. Ha ha ha, just kidding. But wow, Bradley, congratulations, man. You know, it's a good feeling. 5 years of struggling. You almost quit all 4 times. I'm sure I've been there. I'm sure a lot of you guys have been there too. But there it is. There's the light at the end of the tunnel. You can make your changes. You gotta, I'm sure Bradley worked hard at this. I'm sure he put in a lot of hours to do this, and congratulations. There's a testament to hard work paying off, not quitting, learning from your mistakes, and look at now the results. So congratulations, Bradley. If I can just give you some advice from now, is to take a break this weekend. So take it all in. Remember what you went through to get where you're at right now. Come up with a new plan going forward starting next week. And how are you going to go about it? And make sure you've overcome the demons that, you know, the last 5 years, and you've overcome it. And you know, if it ever comes back, you know how to handle it. That's my advice for you. Because it's been a long road, but now just take your time now. Whether you take even next week off, to take a week off and just, you know, recalibrate and appreciate how much you've worked hard, and then get started again. But congrats, man. That's huge. That's big motivation for not just myself here, but for hopefully that motivates everybody here. Okay, that's good. Thank you. I love to hear some success stories too. So good. Thank you for that. Welcome everyone else. Kyle, welcome. Thank you guys. Okay, and guys on YouTube, thank you guys for joining. Sorry about that, but you know, we got to give the flowers when they're deserved to anybody here. If you guys on YouTube are doing really well, you guys get shout outs too. So thanks everyone for joining. Justin, Sandra Clue, thank you for joining. Welcome. Ilias, welcome. Help us, we are drowning. You know, I drowned too, but now I learned how to swim, right? I don't go jump in the ocean if I don't know how to swim. Okay, so if you're, same analogy, if you don't know what you're doing in trading and you just go in, you could literally drown. Okay, so you gotta, if I go jump in the ocean, I better know how to swim, or else I'm gonna drown in there. Okay, so if you've gone through this now, you're at, maybe Bradley can help you, because I'm sure Bradley was at a drowning phase as well. You got to go back and you got to kind of learn from what happened, and so you don't make that mistake again. But now it's time, you got to literally like learn how to swim now, learn how to trade. Because if you don't learn, you're going to go back in and you're probably drowned and possibly do much worse. Okay. So I'm not trying to be tough on you. I'm not trying to be a wise guy or something like that. But I'm just trying to tell you now it's you. Okay. You made a big mistake. Now we got to learn what we're doing and then come back. Okay. Everyone has gone through it. You're not the only one here. I just read from someone in our group. For 5 years, we've been drowning and finally got out of it. So you got to work hard now. This is now going to show how strong you are. This is really going to show you're real. Are you really want to learn how to trade, or you just want to play games? This is what's going to come down to. I went through this phase. Bradley right there, I just read, went through this phase, and now it's your time to go through this phase. So it's on you. And we're here every day. We're here educating. We're here live every single day. Subscribe to the channel and follow what we're doing, and you're gonna help to learn. And then maybe when you learn how to trade, you can hopefully recover the losses that you've incurred and go back to break even. And then I'll have the same conversation with you. Then I'll say congratulations to you. You've came back. Now maybe you should take a week off, understand where you came from when you were in that drowning phase, when you were losing. Now you got it all back. Now we got to think positive, and what's our next plan going forward? So that's what I would say. I don't want to tell you something like it's going to be okay, don't worry about it, keep trading, you're going to make it back. No, because I would be lying to myself saying that. And I know how tough it is to trade, especially when you're down. Now your psychology, your emotions, everything, your technicals are different. Now you could be impulsively trading because you want to make that money back fast. And that's not how the markets work. What are we preaching here every day is patience and discipline. Sometimes you have to wait. You got to wait now. Okay. I wish you joined us earlier and maybe you wouldn't have encountered that, because every single day on these calls, we preach proper risk management. I'm sorry. But that's the way how the financial markets work. You're not the only one. I'm sorry it happened, but we got to kind of move forward. That's what you got to do. We've all been there, so we know what it's like, but some people got to go through it, and then they'll understand how difficult trading really is when we say it here. That's why I hate traders when they say trading is easy. It's not easy, guys. Okay, I don't want to make the whole call just talking about that. Congratulations to you, Agent Smith. And sir, on YouTube, you need to continue to work hard at this, okay? Now what we're here for is our swing trading class. This is class 3. This is the chart that we've been looking at, gold. And now we're starting to see it open up a little bit more. Because remember, it was in here. It was coming up. This was after our call yesterday. It came up, tapped in here. I was sleeping at this time. Then it came right back down in Europe. And look at how many times it has been in this green point of control block from this 4-hour candle on Tuesday, December 9th. Right in here it came in. What did it do? It activated, remember we talked about this yesterday? It activated all of those pending orders. When I see it move up like this and close there, it's telling me the delta was pretty positive in here because it moved the candle all the way back up. Here's where it came all the way back down again in here. Wednesday, 6 a.m. This is live New York. It came back in here again. Look at the wick right inside that completed point of control, and the body came back up and closed there. So it's telling me again, it picked up some delta volume in there without breaking that block. The next 4-hour candle opened, continue to move up, but you see it's getting reduced by 50% of this big bearish candle. The sellers are still here. And then this is where we trade inside, called consolidation, sideways range. And then look, it came right back in there. This was 9 a.m. This is Wall Street now. And then look, one more time, kind of like it double dipped in there, not double dipped, triple dipped in here. So it's coming in again, activating, and it looks like positive delta volume. So when you see like a wick in a zone, it should be suggesting something to you, right? When I see this, it's telling me the sellers are trying to come in there and sell in there, but the buyers are saying, nope, it's not happening. We're there protecting this area. Then finally, this was the big 4-hour candle we were waiting for. This was FOMC today. So you see it opened, and it was originally, look, it came all the way down, bearish, took out these wicks, but did not take out, like this particular body. This is a very important body. Why? Because this is the big engulfing body that created this point of control. So this is the point of control, but this was the opening balance. I don't think I've ever spoken about this, but now I am. So if you haven't heard me talking about this, now is the time to pay attention. Do you guys know when I always talk about the point of control of a bit of a significant bar, like right here, how we identified this? What made this significant bar was the opening balance. Remember when I always attach my Fibonacci? Where do I attach my Fibonacci to? The opening balance and the closing balance. The opening of the bar and the closing of the bar. Why do I do that? Because that's the opening balance. That was like where it opened, and that dictated the price of that particular time frame. So those were strong buyers that opened it. So if it ever comes back down, like breaks the point of control, I know that the point of control might not be holding, but then I'd like to see that the opening balance has to hold. So see that red line, like right there? So it came down there, but look, it didn't even tap into the opening balance. I know it's very technical, but it made a higher low. So what that's suggesting to me is the buyers are preventing it from breaking down further and holding it and creating that higher high. They're asking to trade right here, like they're not allowing it. They're not asking to trade down here because they do not psychologically want to break that opening price of this bar, because that could significantly change the depth of market. Then it can show weakness on these buyers, and then that could flood offers above us. So markets are very psychological. Very psychological. So when you start to understand those concepts and those principles, it's going to make you that much more appreciative of price action. So did I explain that correctly? I don't want to continue going because this is a really important observation. Like, I know to look for this when I'm scalping, right? I don't know if you guys know to look for this. That's why I'm asking you guys, does this make sense, what I just told you? Yes, no, maybe so. Yes? All good, Justin? Okay. We're good. As long as I go. I always say, sorry, guys. I'm about to choke on my eggnog. One moment. Woo, this eggnog is strong. Oh shit, I almost choked right there. This is some strong ass eggnog. Whoo, Sergio, you got to get this eggnog, bro. This is some strong shit. Wow. Whoo. I don't know what they put in that, but it's pretty strong. Okay. Let's get back into this. So, I just talked about that. But what I was saying was, Justin, as long as one person understands what I'm trying to put down on a call, that does it for me. As long as I can change someone's and teach one person. I know sometimes we get 100, 200, 500, 600 people on here. My job is just to teach one person. If one person learns something, I've done my job as a coach, okay? But if we can get 10 people, 100 people, and 500 people learning, oh man, then our work is really, really doing good, okay? So, and now when you learn something like that, make a mental snapshot and watch another time when this happens. Another time when it breaks a point of control, will it be held at the opening price? That's another thing. And then you can kind of see for yourself, okay? And now let's look. So it gathered up liquidity there in the green zone. Here, unfortunately, it broke. So what did they do? When they broke it, they hit more pending orders down there. They swept the liquidity down there. So they did a whole sweep. So anyone that had stop losses down there, like what if these buyers here place their stop losses down there? The market doesn't care. It wants liquidity. So it comes down there. We talked about this yesterday, hits pending sell orders, pending buy orders, stop losses. It's basically the way how I look at it, I say it clears the board. If there's anything on the board, it clears it. Like when you're in school and their teacher's writing on the chalkboard after the assignment, she gets her eraser and she just erases everything off the board. There's nothing left. That's the type of analogy that I use. When I'm teaching my daughter about this, it's like we have right there, that screen behind me is one of those Samsung kind of smart boards. I can make it and we do it with markers. That's where I teach my daughter, on that board behind me. It's a smart board. So we put it on a whiteboard and I'm coloring blue candles and red candles. She cuts them in half over there. And then when I'm done, When I'm explaining to her like a liquidity sweep, it's this, it clears the board. So when I'm done clearing that board, she knows what a liquidity sweep is, guys. I swear, like, like she's learning. She is gonna be one of the best traders in the world. I'm telling you. She's 9 years old and she knows all these concepts. It's funny because I'm gonna get her on here soon when she's older and she'll be streaming for you guys. And then that's when I'm going to be sitting back. You'll see me on that chair in the back, having a smoke and drinking some eggnog. Okay, so this candle opening after the sweep, perfect, bullish, still holding higher lows and has not broke the December low. So it's holding strong. They cut the rates today. And look at this bullish candle. What is this bullish candle's job? Is to continue to fill wick. It just had to fill this wick. But look at what it did. It completely came up. It got above this bearish candle, above here, kind of above this wick, cleared that wick. So look at how bullish it was. And how high did it get up to? All the way up to here, just right below 4,245, our daily point of interest. It came there, got rejected back down and closed. Okay, so now this is a significant candle. If this was like a 5-minute setup, I would be saying the same thing. Did it close above the structure? Yes, it did. Okay, so what is the first thing that we need to do with this bar right now? We have to do something. Okay, first thing I'm going to do is grab my Fibonacci tool. That's the first thing I'm doing right now. Okay, I'm going to cut it in half and I'm going to find the point of control of this volume. Okay, so there's the opening price. Someone, this is another question I get. I want to just make this clear. I can do it from the lowest point to the highest point as well. And that gives you the range, right? I personally don't do it that way, okay? And if you do it from the wick to the wick, you're right as well, okay? It's just going to give you a different point of control. This is kind of exhausted volume. I go with the true critical volume. The real, it's called the real body. That's why the candle is called a real body, right? You got it, Sandra. Or Sandra, sorry. Shay, you got it. It's a real body. So I go with the real body. Why do I do that? I don't know. But I've been doing it since day one and it works and I'm not breaking, when something is working. If you want to go from the wick to wick, that's on you. But the one thing I say to those traders, if you want to go wick to wick, make sure your entire top-down analysis is consistent. If you go from wick to wick on the daily, make sure you're going wick to wick on the 4-hour, make sure you're going wick to wick on the hour, make sure you're going wick to wick on the 30-minute, 15-minute, 5-minute, 1-minute. Keep it consistent across the board, okay? You see, when I keep it consistent, I go from open close on the daily, 4-hour, hourly, 15-minute, 5-minute, 1-minute. I stay consistent and it's pretty much spot on that way, okay? I back tested this for you guys a million times, okay? So I'm telling you, it works. Not always. Nothing is guaranteed in life, but it's got high probability, okay? So, opening balance. Closing. This is a significant candle. It's our FOMC volume, and it actually is physically closed above structure, okay? So, first thing is cutting it. Cut in half. Yellow line, okay? There's my yellow line. Cut. Let's see the number. 4,215, okay? Not bad. I would have liked it more, 4,225, but it's in between 4,200 and 4,225. Now, can we figure out the point of control? Easy, easy. Grab our rectangle box, either the 618 or the 382, however you have it plotted. There it is. Let's stretch it into the future for the rest of the week. Okay, now we've found the point of control. This 4-hour candle just opened up and had a slight pullback right there. Has it came in here? No. So you know what I'm doing? I'm setting an alert right here now at the yellow line, 4,214 or 15. Right click, add the alert. I've created it. So now what I'm looking at is if there was buyers, FOMO buying, like even here, how it's still moving right now and can break this wick and continue to travel up, there has not been a pullback into this point of control. And you look at it, look at the level it used to be. So now I'm going backwards to show you. Look at what it represented right over here. right there was a red zone. It was representing that wick going down, that wick going down, that wick going down, that wick going down, and there was the drop. Here's our second bottom with the liquidity grab and the body closed above. If I go further back, look, this contained that black candle, that blue candle came in there, but it rejected back down. So we're still trading in this block. However, we've got confirmation now that that big blue candle has closed above. So it's the same thing I'm doing now, flipping it to show that it could be now developing. As I'm speaking right now, there's pending orders now in a queue, and they come in there and they keep, the queue might get larger and larger if there's more demand to buy at this price, if this thing continues to go up, right? So that's the most logical explanation. Now, if we're looking for a buy, has gold came down in there yet? No. Okay. Will it come down the next 4 hours? I don't know, right? That's why this thing could continue to go bullish, but it gives me at least a solid pullback to buy a confirmed candle on an uptrend right there. Maybe it will go lower, but whatever. If it comes in there, are three options. It could come in here and just bounce out, right? It could come in there and just break right through it and then catch a wick and then go back up. That would still suggest to buy. And then the third option is it comes in there, closes black below, then that zone unfortunately will flip red, and then it's sellers, and then trading back down in this block. That would be a better block to buy. Why? Because there's a wick in there, a wick in there, a wick in there, and a wick in there. So this depth of market, 4,190, is much stronger, deeper. When we were just talking about swimming and you're drowning, when you go deep, deep, deep in the ocean, you can't breathe anymore. This is what's called the depth of the market. The deeper we go, the stronger it gets down there. Okay, this is still a pullback, but if it comes down there, obviously it is stronger buying opportunity. But this level is building as I'm speaking. So I'm placing an alert in there. And my goal on a swing trade is if it comes down in here and, builds out of here, maybe like something, I'm looking to buy. I'm looking for a swing buy here. So this is how I would position it. You can try a pending order in there too, like have a pending order if you like. And then the goal is wherever this thing finds a resistance on this leg, whether it's here or here or here, it's kind of to come back to that wherever it is and maybe to break for a new high, right? And then your stop loss is you could go really tight, just be below the block. That's a tight stop loss. You could go maybe below the FOMC candle that opened up, or like right there was the FOMC open. When I said if it can't hold this block, maybe it will hold just like here. Same thing, same analogy, see this blue candle, what I was just talking about, what I just explained to Justin there. When it came up, it pulled back in here, pulled back, but one more time it came down. But look, it's still, if these traders had their stop loss below this bar, they're still live. They're in the money. They never got tapped out, right? They positioned their stop loss correctly. That's what I would say to them. So same situation. If you see that this was the FOMC bar that opened up and you want to give it more room to breathe, you could be right below the opening price and keep your stop loss there. However, some traders want to be more safe below that block. That's up to you. That's going to be determined by you. How much are you willing to risk on the trade for your reward and things like that? Okay, so that's what I'm potentially looking for to swing trade. And it might come back tomorrow. It might come back Friday. It might come back next week. I don't know when it's going to come back, but that's what I'm looking for, right? I'm looking for confirmation of a bull move, which we're getting. And we're approaching December's high. So I don't know if this run will continue to take out December's high. Then it will pull back in. And then that's where I'm looking to take a swing buy. Okay. You guys can mark it on your charts, add an alert. But when it comes down here, again, I don't trade blind, right? So if it's coming down there, hypothetically, it's coming down, I get a notification. So it's telling me it's in the zone. So what I do is then, if I really want to look at it, I can come to the hour, see what the hourly candles are doing, and then look for my setup. I want to see, is the hourly candle coming in there? Did it get a wick? Did it just bounce out of there? Is there a double bottom on the hourly in there, to strengthen that second move? Whatever it is, you can go down. I can even go down to the 5 minutes and watch how the 5 minutes react in that zone, right? And then the intention is once I'm activated or in it, I'm not scalping it. Then I get off the lower time frames, whether I go to 1 hour to get in or whatever, and then I go back to my 4 hour chart, and then I set my stop loss regarding the 4-hour chart, not on a 5-minute, right? Because I'm looking to make maybe 100, 200, 300, 400, 500, 600, 1,000 pips. I'm not looking to make 50 pips. And my stop loss is not a small stop loss, not a 50 pip stop loss. Stop loss would be 100, 200 pips, you know? Well, I don't know. I measure the zone. Like, I can't just tell you a hypothetical number. I'm telling you, if you bought right there and you just place your stop loss right at that red line, you're 150 pips as a stop loss. Okay. So, you know, it is a lot, you know, when you start telling these numbers to people, they're like, holy shit, but you're swing trading. So your reward could be 400, 600, 800 pips, right? So it's the same risk R&R. Okay. So do you guys understand that? That's what I'm looking for on a swing trade for the remaining of this week. Or the only thing I'm looking at also is if they take out the December high, and it gets rejected, I could be selling it down to this block. Do you guys understand? I do this when I'm scalping. I did it today, you know, on the gold. We sold that leg down on gold right here. We sold this leg down and then you see to that block and then you can buy it back up. So sellers sold it down to that block and then they get out of the way. They realize their profit because they know those are buyers waiting there. So the same thing on the 4-hour, you know, it could take out here and as sellers sell it down to these buyers that are pending in here, and those sellers realize their profit and they get out of the way themselves, right? So the other option is we could be looking for buys here, right? Or if gold continues to drive and take out the December high, let me just play it out. Narrative. Let's say we break out, create a new monthly high, then it gets rejected, and then we see this. That could give us the go-ahead to sell it back down to maybe this red line, ultimately to that zone right there. And then you see what I'm doing? I could swing it on the way down and buy a swing on the way back up, right? Just like I do when I'm scalping. But now you guys understand how you can, whatever you learn scalping, you can still apply it to swing trading. But you just got to use a different type of risk management and bigger stop loss, obviously our bigger rewards. But you know what I mean? Does this make sense to anyone? Or I got to know, guys, because I know these things. I don't know if you know these things. Am I like, I hope this makes sense. I always tell myself, I hope what I'm saying to these guys makes sense. So then I could maybe look for, let's say I was to sell it down, right? And then stop loss. Where would I place it? That's why I have daily points of interest, right? So then I'm not just guessing where I'm putting a stop loss. I know then maybe I'm putting it above a daily area. I could go, I also look back relative to this red line. I can see, or yellow line, I can see how the 4-hour bars were trading at a particular time when they were there, right? So you kind of can go backwards and see where you want to place your stop loss. Some traders will go all the way back to the, you know, like the all-time high zone up there or whatever, but maybe there, above there. And in my reward, as long as I'm getting a 1 to 1.5, 1 to 2 on my money, but I'm a trader that manages my stop loss, right? You guys probably see when I'm scalping. When I'm scalping, if it goes down 50 pips, I'm taking my stop loss and I'm going down. I'm reducing. So when I set a stop loss, it's kind of like an unrealized stop loss. I just set it to get started, but I'm monitoring it. So when I'm scalping, if it goes down 50 pips, you guys probably see I take my stop loss there. When it breaks maybe 7,500 pips, I go to a break even and I take out 80%. I do the same thing when I'm swing trading. Same shit, right? I'm never going to just, if I'm down here and it's like 500 pips in profit, I'm not sitting up here like a sitting duck with an open stop loss. I'm not silly like that. So you got to kind of gauge, you know, like this is 4 hours. So even if it's just like a 5-minute move, if it comes down to this yellow line, that's 150 pips, right? A little break, you're up 200 pips. So right there, you could reduce your stop loss significantly, like right there. You've really reduced it by 200 pips, your stop loss. And then if it continues to come down to your zone, that ultimately you should be like at a break even. And then there you got 450 pips down there. That could be your weekly swing trading goal. And then look, then it comes in here and you could potentially buy it right back up. Unless these sellers can close it below there, then this buy signal is negated, no longer valid, because if the sellers, remember that option I gave you? If they close it below there, it comes back up here. This is a red zone. So we have to negate the buy. And then it could continue selling down. And we could further swing it down or leave runners to continue to break. So that, guys, in a nutshell, is how you swing trade but the same thing you're learning on the intraday, like on the lower time frame, is the same shit, right? So why don't we just set an alert now at this December monthly high, purple line, 4,265, because I want to know if this move has enough volume to continue maybe later tonight to break the December high, and then the sellers come in. So right click on the purple line and we create the alert there. Okay, so I've got maybe a potential sell setup that could work, and then a potential maybe buy coming out of here. Okay, but if you don't feel comfortable with the sell leg, then you're waiting to buy the pullback. However, there are some traders that want to go both ways if that plays out. Okay, but another thing, guys, is I respect these yellow lines. Okay, this is the difference between me and maybe some other traders. I respect my daily points of interest. So I know from scalping the markets, I know if I get in a sell that it could just come down to that, and this was resistance, and now it could be support. And the move could just come right down there and bounce and go back up, and it's gone, right? So when it comes down to these levels, I monitor as well. Will it continue breaking there? If I'm watching the 4-hour candle, I can dissect it in hourly. And then when the hourly candles are coming down there, I look, is an hourly candle closing below? Is it going to make this daily yellow line resistance? Black candle on the hourly. Then when the next hour comes up, then it gets rejected. Then I know the 4-hour candle is still coming down. Then that's valid to continue to sell. But if I see an hourly candle come there, get a wick and close back above and build off here, I know that it could be now consolidating here, and that hourly move could be coming back up now. So what I do is I place alerts at all of these daily positions. Like I have one at the purple line, I have one here, and I'm going to place one right there too. Because if I go into the sell and it's coming down, it alerts me at this position. Then I watch it. Do I want to start reducing my risk? Do I want to take some off the table? Do I see it building? Maybe it's going to reverse back up, or is it breaking below? And then I'm safe to hold my trade to continue to go down. So that's how I monitor my trades. I don't know how you guys do it. I'm not one of those traders that just sets it and forgets it. It's not my style. I know it works for some other traders where they set it and they forget it. I don't do that. I monitor every single pip I'm in profit. That's the way how I do my job. I don't leave too much on the table to go against me. Every pip is money, right? So I kind of like to get as much as I can out of the market and maximize it, because it's happened to me a million times when I'm scalping. It comes down there, and then it bounces right back up, and then it goes back down. So then I've learned over time in scalping, why didn't I just take out my money there, 50 pips? In this situation, it's like 200 on a swing trade. You pocket that money. Then if it does bounce, I could sell it back again at a premium and sell it back down. So, but a lot of people leave the money on the table where it bounces right back up. They lose that. Then it goes back to their break even. And then the bigger seller comes in and drops it. But me, I'm taking my money out. If it comes back up, then I could sell it back down. And then it goes back 200 pips in profit and it breaks and you get an additional. So, but that's how I work when I'm scalping the markets. But I use the same analogy when I'm swing trading the markets. I know maybe it's too much for you guys. Swing trading should be more like set it and forget it and let it play out. But that's all up to you. Some people have different lifestyles. Some people can get an alert and monitor it. Some can't. So you're gonna have to figure out what's. Good question, Forex. What about news? So also news affects everything. So if I know I'm in a profitable trade and I'm going into some significant news, that could change up everything, right? Just like these swing traders that were trying to sell gold down, like they were trying. That was a big bear candle prior to today's news. I'm sure that they were selling to break the monthly low and cause gold to go down, but that news interrupted that, and FOMC destroyed their narrative. So they're either holding in drawdown or they got liquidated right now. So that's how markets move. If you're swinging, you got to know when to initiate the swing. That's why now I'm looking for selling after FOMC if it breaks it, because the news has already been released. That's why I'm making my analysis. And I'm also, if anyone didn't really trade FOMC, they're missed out. They're looking to buy pullbacks maybe in there. So That's how I trade. Then I go through Thursday and Friday. There's not too much significant news. And then we got to look into early next week, Monday, Tuesday, Wednesday. If there's no news, then gold will flow how it's normally supposed to flow. Any news will interrupt that and it can change your swing trading outcome, right? So, but if you're going into profit and everything is working out perfectly just before news, do the smart thing, do the mature thing, take some money out, go to a break even and leave a runner. That's what I do. There's nothing, we can't change the direction of what these things are, where they're going. I can't change news. All I can do is adapt to what's going on and try and make as much money as possible while I'm in the trade. Okay. The worst thing to do is piss away all your gains. You wait all week, you wait a few days to get in your swing trade, and then it's working out perfectly. You're up 300, 500 pips. The greed comes in. I got to make 800. I want 1,000. It comes down to 500 pips. You don't do anything, and then it reverses right back up in the next 4-hour candle, and you're left scratching your head. What the hell just happened, right? How many times have I done that live when I'm scalping? I go up 50 pips. I don't do anything. Next candle, boom, comes and liquidates me right at my break even. And I'm left scratching my head saying, well, why the hell didn't I just take out 50 pips? So have a plan, guys. Make sure. This is what I mean. When you have a plan, the way how you trade, you're always going to stick to that plan. See, I'm a scalper, but when I swing trade, I still have that same mindset. I'm very disciplined. I know what I'm looking for. It's just a different time frame. That's all it is, right? So hopefully you guys understand that. But those will be my levels that I'm watching. So I'm watching to see. Also, if it can't break this, we could see a significant pullback coming down. You could even sell this leg. You know, if this 4-hour candle fails, next one comes up, gets rejected again, we could start to see it maybe coming down, and you could get, I'm not saying a swing trade, but it could be a nice little pullback coming into the zone where this point of control is. So we got to continue to allow this to play out. That's why I've set my alerts and I'm ready for it. Do you guys understand? That's how swing trading works. You know, now you got to wait for it to make its move. That's all we can do. Okay, so that's kind of my analysis on gold. Crude oil, remember crude, we did a little analysis on crude on the 4-hour. Okay, so we got this big demand zone down in here, just under $55 a barrel. We have this big upper red supply zone at $63 a barrel, and we're still kind of in this pennant right now, stuck inside here. So the volume is still accumulating. Here it came down earlier this morning. Then we had our crude oil inventories news, and it's bullish back up here. So if you kind of want to trade off of what's going on here, if you like, see this, where there is some solid support right here, like a pivot that was holding right here. See this? It kind of cuts this bullish candle in half right there, right just around 58 bucks. So, you know, if you want to buy an oil pullback, I want it to come down lower, but maybe this is the lowest point that's building right now. This candle, I know it's not the one that kind of engulfed everything right here, but it was the candle that swept, that came right back in and closed positive. And the next one didn't pull back into here. It just took off. So this looks like a strong candle, and it was right when they released the news, the crude oil inventories at 10 a.m. So it's a strong candle. What I would do is I'm going to mark that up, the point of control of this candle, because oil is at a good price right now. See right there. See how it's 50% exactly right in there? Right there, perfect. And then the point of control is, look at those bodies right there, right to there, okay? So that could be, if we're looking for a pullback swing buy on oil, around 58 bucks, okay? But we gotta wait, right? And then we can look backwards, okay? That cut, look at, okay? So this is why it strengthens my decision. You see this big blue candle right here, November 26, 10 a.m., closed above, right? So there's the point of control of that candle. That wick came down close, that wick came down close. Those were equal lows, did not tap into here. Finally, it tapped in there, and look at how it came out with that leg. Then they really dropped it down, but look at how it got gobbled right back up. So those buyers held the move, like from breaking down. There's where they came right back in, and they protected it from breaking down right below that block. So it came in strong, and then right away we should have got a pull back into here. It didn't. It just continued to advance out of there. That was FOMC right there. So if it ever pulls back, that's where I'm looking to swing trade a buy for oil. I'm placing an alert at that red line, right at $58. Make sense? So what I'm looking for oil is to see if it can continue to come down, maybe build off that, and then have the big move, right? That's what I'm looking for oil, for a swing buy. I was like here, the sellers, if they closed it below, and I was looking for a push down, but you see how it got held up and it came up. So that could be a potential swing buy opportunity. So I would be looking for a buy, and then I'd be looking to clear the entire green zone and maybe break where to about 50% of that bearish candle right into there. That would be my target, what I would be looking for until the trade. I don't know. I might change the reward depending on whatever builds in here. But that would be ideally where I would want to take it, into that untapped block of this big bearish candle that started this lag coming down. So like right in there. I will even identify that candle with a point of control. Again, how? Opening, closing price. See the red line? I cut it in half pretty good myself, but let's be honest and perfect with ourselves, right? And then it gives me a little zone to trade into. You guys understand what I'm doing? Because I've seen this pattern on 5 minutes. Like, you know, when you're asking me run your playbook, I've seen this pattern play out a million times. This is one of my go-to scalping buys, right? I know I've seen this on the 5 minutes a million times in my life. Look, it held that point of control. They came down, we weren't successful. There it tapped in. That was the first initial reaction. It was a solid reaction. That's like that first buy out of there. But then here's the real pullback, and the sellers closed it below. And that's that push down. That's where they trick those sellers to sell the lows, and they get caught in there. And then they reverse it back up. They close it strong. And then right here, you know, I'm waiting on the next bar to pull back. It doesn't give you that opportunity. Why? Because it's kind of like an ignited open that just continued to move. So that, I guarantee you, this $58 area is developing with a lot of pending orders. They could be sell orders, sell limits, pending buys, stop losses. Maybe all of these buyers have their stops down in here as well. So it would make it natural that the market would want to come here one more time, maybe double bottom there to extend it and have the big move. So those are my ideas, guys, for swing trading, for gold, maybe to sell the December high back down, and maybe to purchase this FOMC point of control. The numbers are December highs 4,265, and then the bullish point of control is anywhere, I would say 4,215, right in there. And then oil, looking for a pullback to $58, right? Does that make sense, guys? It is 7:34. Guys, hit the likes on YouTube if you guys can. I know there's not a lot of us. Subscribe to the channel if you haven't already. Thank you, guys. We just broke 91,100. So awesome, guys. Thank you guys so much. But you see, guys, why swing trading takes more time, takes more effort. You got to wait for these things to develop. But what's good to do is, if you have like 3 securities that you enjoy trading, this is where then you can have like 3, like, see how I have gold. I got some alerts set up on gold. Eventually when it comes, I can get in and trade there. I've got an alert set up for oil if it comes in here. So I could do, like, you know, one more security for 1 week. I have 3 securities. So maybe one of those securities will come to one of these points of interest during the week. I know some traders that really are like really professional. They have like 10 that they watch, and 2 to 5 of them a week come into these zones, and they're taking 2 to 3 swing trades a week and maximizing their pips, right? It's all just depends on everyone's lifestyle, personality, what you want to do, right? Kyle, would you mind sharing the chart? Yeah. Okay, Kyle, what I'll do is I'll just copy it. Guys, you tell me if I'm doing it right, because sometimes I do this. I come over here. Guys, remember, I'm not like an expert here. So I copy the link, and I'm just going to drop the link in your Zoom chat right there. And then I think you can just, you guys tell me. Okay, there it is, Kyle. That's the oil link. And let me just give you the gold one. Click on it and let me know, guys, in the Zoom if it's all good. And then you should see another trading view link, Kyle. Should be the gold one. Oil is good. Okay, awesome. Sergio works. Perfect, guys. Excellent. Can I send the links in Telegram? Yeah, you want me to try? Which one? I'll do let's see, we'll do oil. Let's see if it will work with oil. Let's see. Guys, remember, join that free Telegram channel so you guys can see if the link will go in there. Let's see if I can post it in here. Or you know what? I'll do it after the call. I'll do it after the call. I'll get it after the call in there, okay? I'll get it in there for you guys. No worries. Ibro, welcome. Hola, Ibra. Please explain how to identify the right candle where we mark the 50%. Okay, good question. Good question. So, which candle? That's a good question, guys. Okay, so maybe some of you guys have this question as well. Which candle is the one to identify? Because there's so many of them. Okay, so what we want to do is, Ibro, give me any chart. Any chart. I want to do it like freestyle. You give me any chart right now. So I want to make it like it's, I'm not just picking and I'm going to choose. You tell me a chart. Anything. What security? So we can look at this together. So I'm not just doing it on charts that I'm familiar with. Give me anything. I'm going to show you that we can do this on any chart, any security. Give me it. Ibro, this is your question. You're a boss. Give me any chart, any security. Anything. Nothing? Okay, maybe you can't hear me. Euro. You guys want euro? Okay, what? You want, let's see here. GBP USD? I got that. Let's do GU. It's just to learn which bodies to look at, okay? So this is GU. This is a completely different security. We're on currency now. GBP USD. Ron hasn't traded this thing in 10 years, okay? But this was if you ask me, this was how I learned how to trade Forex. GU was my go-to. Oh shit, do I have some memories with GU. GBP USD was my favorite. It's very technical. It's a little slower, but it's great for a beginner and it's great for if you're learning, okay? So I'm just gonna clean charts, get rid of everything. So now we're just looking at price action. Okay, so now, which candles? Great question, okay? So we got to look for structural candles, ones that make a significant impact on the markets, okay? So me just looking right now, there was resistance right here, okay? So you guys all follow what I'm doing here. I can see when it came up, impulse, wick, back down. Came up, impulse, wick, back down. Came up, impulse, wick, back down. Came up, impulse, candle down. Came up, impulse, body close. Impulse, body close. Red line, wick, wick. So is it safe to say that this red line is located at an area where we've had impulse, 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 and impulse? Yes or no? That's it. It's not a trick question. If you guys answer this fast, I can go faster. Justin, perfect. You're on the game. So in this, it's just wicks, right? I'll even make it neutralized so everyone is on the same page right now. So when I ask the question, did a blue candle close above this red line? The unanimous answer is no. It shouldn't be a trick. Now, is there a body that did close above this? Yes, right here. It was Wednesday, December 10, at 2:55 p.m. Eastern, right before power hour, 3 p.m. Okay, so that's our first candle. First bullish candle that has closed above this level where we had 1, 2, 3, 4, 5, 6, 7, 8 times where the buyers tried and failed. So this is our first one. So that is a significant candle. It managed to get through here, create a high and close with bullish volume. Now, that is a candle that I want to identify a point of control off of because this was the bullish candle. If I ever get a pullback into this, that's the candle I want to be looking for buys, okay? So now how do I do it? Grab your Fibonacci tool. Guys, I have it set a little different. Let me just go to the settings. This is the way how I normally have it set when I'm doing it like this. Go to your Fib settings, everybody. Click on your Fibonacci tool. It's a universal tool, so it's the same shit for everybody. Click off the 0. Click off the 236 because we won't be using this for this particular purpose when we're looking for the point of control and 50%. And we need the 382. You can make it whatever color you like, okay? We need the 0.5. There's our cut. This is the most important one, our 0.5. Make sure you have that one checked off. And then our other one is the one above the 0.5 is our 618. So I have it like gold or yellow right here. So I don't need the 786 for this particular purpose. I don't need the 1, and I don't need the extension 1.618. So I just have these 3 clicked off, okay? And now that will determine exactly what I'm looking for. So it was a bullish candle, opening price, closing price, from the open to the close, okay? Now, can I determine where's the 0.5? Yes, it's right there, okay? Can I determine the point of control of that bullish candle? Absolutely, right there, okay? Now that I've identified it, just stretch it into the future. And this is where you got to patiently wait now, okay? And there's also a fair value gap I can see, okay? For some of you traders that are trained to look at this, you see the wick right there and that wick. You see, that's the bullish fair value gap, right? But I don't need to teach you any courses with all this bullshit talk of ICT. I'm just telling you, a significant candle, cut it in half, find the control, that's it. I don't need to overcomplicate this with some silly words and overconfuse you. It's that easy. Now, what I do to kind of back test this level, that's it. When I learned how to do this, I wasn't just satisfied with that, okay? Now I went backwards. So I saw, okay, then this had to be a red block backwards, okay? And I showed you, there it is. Those wicks came in, red block back down. Came in, there's that hidden block. I'm telling you, this is how I learned how to do hidden blocks in the market. That's why when you guys ask me, Ron, do you do a footprint chart? Ron, do you do level 2 analysis with Bookmap? I used to, but I find I don't need it. Like, I don't need it. I'm telling you the honest truth. I'm telling you, because if I wanted to use it, I can use it. I have used it, but it really doesn't give me any benefit, just a little bit. It can show me a little bit things, but a lot of traders don't know how to read a depth of market, and then it makes like the education even harder, because some traders don't even understand how a traditional candlestick works, let alone teaching a depth of market. So I don't want to overcomplicate things, because I know some traders are just beginners, but I'm going to be doing that more in our new year, in our real curriculum, in our real education that we're taking forward. And that's going to be teaching about everything about order flow, depth of market, because I know those traders are more serious and want to learn more. Oh, that's Mr. Powell calling me again. Mr. Powell called us 2 times on our FOMC, and now he's calling again. I think he wants to come out for chicken wings with us. But okay, so you see that zone? Red. If I continue to go back now in the past, this is how I verify things. Did it ever trade back in here? Look. Wow. Okay. So remember, I'm on GBP USD. You guys told me go to this chart, this time frame. Look at when it came up there, almost to that red block, and then look at the market push down. So it has not transacted in there. Those wicks were the first ones that transacted in there. If I continue to go back in that, look, holy, does Ron know what he's cooking? Does Ron know what he's talking about? You guys tell me. Look at that block. I love GBP USD. I used to pip and dip on this thing back in the day. Look, came in. Is this a pattern you recognize? There's the liquidity grab back down. Look at the second top. Oh, that's a pattern. I think we traded this same setup the other day on gold, stop loss up there, and you're looking to come right down. Easy peasy, lemon squeezy all day. Okay, look at another time. You guys know what I do in these blocks. If you don't know, now you know. I put an alert right in the mid at 50%, guys, psychological. Click it. I could be selling GU all day, every day at this zone. How many times I could have got alert there, sold. Alert, there's the second top, there's the big drop. There it is again, first leg, push down, liquidity, look at the wick. Oh my God, who picked GBP USD? This is really technical. Did I not say that at the beginning of the call? This is a very technical pair. If you are a new trader, this is what I would focus on. When you guys go to gold and oil and NASDAQ and Dow Jones, those are fast moving securities. If you don't know what you're doing, you should not be trading those. That's where you're going to literally drown. This is what you got to learn. These technical pairs. Look at the second top. Second top, what does Ron always say? Second top traditionally has the more volume. Look, could have sold that shit too. Place your stop loss above that liquidity wick. And look at that. Guys, this is like, keep doing that. Like, keep going back. And then you can see when it actually, then that was a little fake breakout. But look at right here where it closed above, retapped it. That was green. That was a green box there. It held back up. There it was. There's the bear flag breakdown. That's when it broke down. That's when you could change that block to red. Now in real time, this is where we are. That's why I say go backwards, and that's how you can learn this shit. I used to study this stuff probably more than everybody on this call. I swear, guys, I'm not lying to you. I used to spend 24 hours a day. I would sleep here at the computer. Like I would pass out here, with my wife and kids, because I was hungry to learn this. I was hungry. When someone is hungry and they got nothing else, you got to put in the time. If you want to learn this, that's what I say. That's why I'm trying to help you guys. I know how to do this, but I want you guys to learn this. This can be life-changing for you guys, I'm telling you. So now it's closed above. It already retested it. The first bar came down. I'm a scalper. That's what I wait for. The confirmation, it comes down right in there. There's your pending order. You could sit there with a pending order, been activated, and you're in the money. If you missed it, okay, because if you miss it, you never want to buy the highs. That's FOMO trading. You got to wait patiently. Now look at the most recent pullback. Right there, there's the pivoting area, 133.73. I'm continuing to stretch that zone into the future. I can already see something cooking on GU. I don't know about you guys, but here was the previous top right there. I can see it traded above there. Now it's right back in here. So what I'm looking for GU is it made its top. There's the neckline. There it is. Okay, that was kind of a little fake out up there. Now if it comes back down and breaks this, there's the sell to that block, and that could be where you pick it up and buy it back up right in there. So set an alert and see what happens. Just try it for shits and giggles. Set an alert here and tell me tomorrow what happened. That's it. And I'm going to tell you there's 3 options. I'll tell you the 3 options right now. So what I'm doing is I don't even trade GU, but I already have an alert in there. Okay, my bad. I got an alert in there. But what are the 3 options? Option 1 comes down there and bounces right out of there. It activates that point of control. Those buyers are pending in there, waiting, activated, boom, it goes up. Another move is it breaks, grabs the liquidity down here, doesn't break that ignited bar. Guys, this shit is like, it's the same stuff over and over and over. If it breaks point of control, maybe it's going to get protected at the buyers who bought that candle, right? So I'm visualizing it comes down, catches a wick right here, bounces right back inside here, and follows this direct path. Same thing. Okay, there's option 1, it respects the green zone and bounces out. Option 2 is it breaks but closes above and then retests and gone. And then the option 3 is that the block gets invalidated. Sellers are strong. The black candle breaks right through there. Close it below. This is a black candle now closing below there. I flip that zone red, and then the buyers are bringing it up. Then it sells back down, and then I'm looking for that to break down and trade back down into the point of control. That big bullish candle, ultimately maybe to get down to the lowest point where all of this big volume came in, and that's it, right? What else do you want me to tell you? So that is the structural candle. And then here's another one, okay? So there's one live right now, okay? Who asked me this question? It was, Ebro, my man. I hope you're paying attention because this was your question. So what about this one? You see this big bearish bar above us right here? This is a significant bar right now. Like, see how it was bar coding? Blue, black, that one engulfed, but this one kind of really engulfed everything. It filled those wicks and completed the move. So this one is a significant candle. I would do the same shit with that candle. Cut that candle in half. This is when I'm freestyling. When I cut it in half, I know it's a little bit above and a little bit below. This is what I do with the 1 minute candles, because 60-second candles are opening up every 60 seconds. So sometimes I don't have the luxury of pulling out the Fibonacci tool and doing this and that. So I just cut it straight in half, a little bit above, a little bit below. That's how I figure my point of control when I'm doing freestyle scalping on the 1 minutes. But if you want to kind of, see if I'm pretty accurate, there's the opening price, closing price. Look at, I was a little off by cutting it right there. So then that would make my zone off, but there it is. Okay. So there, now you found a bearish point of control of this guy. And now you can see going backwards how it was support, guys. Look how easy this shit is. That bar closed above. Okay. So it's supporting in here. There's the wick that came in, back up. There's the wick that came in there, back up. Here's your liquidity wick that swept the block and came right back up. And now it got invalidated. Now the selling closed below that block. That's why it's an important one. It's a structural one. Stretch it into the future. And I could be selling now a premium pullback. If GU ever comes back up back into here, that's possibly where I could sell it right back down, right? And if you don't believe me, test it out. You don't have to live trade. Just put an alert in there on a demo account and just back test. See what happens. And tell your uncle tomorrow what happened. Okay? But that's how to identify high probable setups to trade in. And the only other thing is if it closes above, you just flip it blue and then you buy off of it to take out this high and go higher. That's it, guys, but I would go with the color of the zone first because that would show the probability. But, markets can break and do other things. But that's why I don't have an ego when I trade. I just let the volume do the thing and I just trade accordingly, right? I'm not one of those traders where if I'm looking for this, it has to be a sell and I'm stubborn on it. No, I'm open to the three options. I just get alerted that a high probable setup could happen in this area. So does that make sense, guys? And this was on a security that I normally never trade live with you guys. So to show you that it does not matter what security we're looking at, what time frame we're looking at. It's just you have to have an eye for the particular candle you're looking for. And the more experience you get, and if you like our YouTube channel and subscribe to the channel, myself and Dave and the entire team will continue to teach you guys this, and we'll expedite your learning. Where you're learning fast. Some of you guys are really excelling. Some of us took years and years and years and years and years and years to learn this stuff. And we're giving it to you guys for nothing. So I hope you guys are honestly learning. But guys, that's it for me. I got to get out of here. I got a couple calls. My buddies are waiting. We got to get some chicken wings in us. It's all you can eat chicken wings tonight. When it comes to chicken wings, I'll put these guys out. Oh, Sergio, I like that setup. Man, look at the eggnog. Oh, bro, that's a good setup. Cheers. I would love to be there right now and have an eggnog with you. But that's awesome, guys. So how was that? Good session, guys. This is going to wrap up our swing trading, for the week, but we got some levels to watch for. I hope you guys learned something from our swing trading this week. Hopefully, great questions, guys. Solid questions tonight. Good questions from YouTube and Zoom. Great questions, guys. Remember, don't be shy with your questions. I guarantee you, if you have a question, there's more people that have the same question. Guys, no question is a dumb question with me. Ask me anything. I don't care. Just don't ask me how old I am. No, I'm just playing. But guys, let's have a good night tonight. I'm going to go watch some quarterfinals basketball. The games have already started. And tomorrow, don't forget, Dave, if you guys want to join Dave in New York, Dave is pipping and dipping with the team. He does Tuesday, Wednesday, Thursdays, New York, 8 to 10 a.m. Does gold, COMEX, and the Wall Street Market Open. I follow up with Post. Some weeks, I go all over the place. So I'm all over the place. So tomorrow, we're Post, New York, 11 a.m. I can't do another Tokyo. It's my daughter's Christmas party at school. I got to be there. And then Friday morning, guys, it's a little earlier session. We're going 7 to 10, 7 a.m. to 10 a.m. So we'll cover the morning New York session. And I feel like we're having a great week, guys. Let's keep the positivity going and stay motivated, stay disciplined, and stay blessed, everyone, and continue. If you've learned something, pass it on to someone else. Everyone can learn a little bit of financial education. You guys are learning now too. At the dinner tables when you guys are at holidays, talk about the markets, even if your friends and family are not really, they're curious. They're curious about this, and if you know what you're talking about, you're gonna get them thinking about the markets too. It's not a secret, but traders can do good. You guys are learning how to just be patient, disciplined, trade with proper risk management, and you can earn yourself a supplemental income. I'm not saying that you guys are all going to retire and become millionaires and have Lamborghinis, but you can make a supplemental income while you're doing all your other things in life. You're keeping busy, and you can be paying your bills. You can be paying off your mortgage while trading, and you can be hopefully investing for yourself and doing other things. If you want to take this full time and just trade for a living, there is a lot of traders that can do that, but it comes with an added pressure that you have to be able to handle. I don't suggest that until you've really put in years and years and years and years in studying this, not only just financially, but emotionally, mentally. What happens if you go into a slump and you're stuck for 2 months and you're struggling, and you got bills to pay? Think about that pressure you're putting on yourself as a trader and as a father of a family and things like that, or whatever it is, where you got to take care of your spouse and your kids and all of that. You do not want that added pressure on your shoulders. So that's why I'm not one of those guys to say drop out of school, quit your jobs, and life is good as a trader. No, you go in slumps and it gets very difficult because you're thinking of everything else. You got to buy groceries next week, and you're not making money, and you're waiting for your swing trade and nothing is developing, and then that forces you to make trades and cause a lot of damage. So if you listen to your uncle has some good advice. I wouldn't steer anybody in the wrong direction. I got your best interests at heart here, and I know what it's like if you're trading like that. And I don't think anyone wants to go through that. It's not good unless you know what you're doing. That's a different conversation we can have, but thank you guys. Shout outs Asif all the way from Bangladesh. Thank you, brother. Thank you. Let's continue liking and subscribing the channel. Maybe we can get further global reach and every country around the world can learn a financial education with us. I hope so. That's one of my everything I wish for every night is to help someone financially learn, educate, right? And if they can learn something every day, I've done my job and work is done on my part. But I'm going to need you guys to do the other heavy lifting as well. So this is when it's your time now. When we're off the charts, this is when you got to put in the work as well. That's the work that goes unnoticed. We do a lot of work behind the scenes too that goes unnoticed. You guys just kind of see us on our live sessions and things like that. But there's a lot of work that goes behind trading that nobody sees. Nobody but you and the computer. That's it. We all have those stories. We can share them all night. But trading it's hard. It's not easy, guys. But if you keep at it and you have your daily goals, trading will be fun, enjoyable, and you'll really enjoy it. Believe me, you'll really have a good time doing this. Okay. So thanks, guys, for joining me all week on these Tokyo sessions. I do appreciate it. We'll kick off like Monday and Tuesday with some Tokyo and some New Yorks, and we'll revisit. I think next week, maybe just Monday, we'll just go over swing trading, our setups, and then we'll go right back into scalping gold on the Tokyo Futures Open. Okay, we'll go back to the 5 minutes. Swing trading, we'll offer these classes maybe once a week, but you can see that swing trading is basically just charting and setups and alerts and waiting, right? That's what it is. So we'll have more fun on the 5 minutes. Okay, guys, have a great night. God bless everyone, and we'll see you guys tomorrow morning post New York. And I appreciate everyone. Thank you guys for joining me, and have a great day, guys. Thank you. Thanks, everyone. Until tomorrow, Mikey. Until tomorrow, brother. Have a good day. Cheers, Mike. Justin, have a good night. Thank you. I appreciate it. No, Kyle, tomorrow I am on post New York, 11 a.m. 11 a.m. I can't do the Tokyo session tomorrow night. I will be here. Tomorrow's post. Have a good day, guys. Thanks for the questions. Great questions tonight. Sergio, cheers. Love it. Have a good day.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.